Right now, there are over 50 major conflicts going on all around the world. That's the most since World War II. Europe is speeding up its push towards defense independence, and it's ramping up military spending, largely in part due to the Trump administration's changing stance on defending Europe. In a speech of March of this year, European Commission President Ursula von der Leyen said, "We are in an era of rearmament." What this really means is that Europe has had to shift towards defense self-sufficiency, and it's had to boost defense spending. Together, those two things mean that there's going to be multi-year demand and growth potential for defense companies. European Union member states spent $508 billion on defense in 2024. That's a 30% rise in spending between 2021 to 2024. This increase reflects a couple of things. It reflects prolonged conflicts in Ukraine and the Middle East, but also a global push to modernize aging military equipment. NATO's benchmark of 2% of GDP spent on defense continues to drive spending. 23 of NATO's 32 members meet or exceed this target. Separately, Germany is set to expand the defense and infrastructure spending to as much as $547 billion. On top of that, the EU has floated a defense spending target of 3% of GDP, while at the same time, Trump's administration is calling for 5% of GDP. This could bode well for defense companies as a global rearmament is showing no signs of slowing down. Bloomberg News has described defense as Europe's new big tech sector. That's thanks to a sharp rally in defense stocks. In early 2025, 6 out of the top 10 performing companies in Europe's Stock 600 index were defense stocks. Now here's a look at 3 major European defense firms. For example, Germany's Rheinmetall. It's the nation's largest ammunition manufacturer, and it's benefited from increased European defense spending. The company's stock has shown remarkable performance in recent years just as a consequence of all that spending. Rheinmetall signed its largest ever contract with the German Armed Forces for the digitization of infantry soldier systems. This agreement, valued at up to $3.2 billion, will run up until the end of 2030. Another example is France's Thales. It's among a growing list of companies that should see increasing order books on the back of heightened EU defense spending. Its core business segments are aerospace, defense, and cyber and digital. Thales secured a contract worth over $300 million for the British Royal Navy Fleet's communications, and expanded its cybersecurity division with the acquisition of Imperva. And a third example is BAE Systems, the UK's leading defense and aerospace company. It's benefited from the surge in defense spending in EU countries since the start of the Russia-Ukraine war. It's received new orders worth over $40 billion in 2024, and its order backlog has reached almost $100 billion. Now, it might be difficult for Canadians to access stocks listed in foreign markets, such as Europe. In some cases, investors might need to buy over-the-counter versions of the stock, which can carry its own risks and challenges. An easier option could be taking advantage of the diversification, liquidity, and low-fee benefits of an ETF. Rheinmetall, Thales, and BAE Systems are amongst the top holdings in the Global X Defense Tech Index ETF, or SHLD for short, which invests in companies that build and manage cybersecurity systems, utilize artificial intelligence and big data, and build advanced military systems and hardware. SHLD offers investors exposure to the trends reflecting the growing emphasis on modernizing military capabilities across the world. Global defense spending has grown at an annualized rate of 4.2% since 2020. That's 4 times higher than pre-pandemic levels, according to the Stockholm International Peace Research Institute. The institute estimates that spending is expected to grow at a 5% annualized rate to $3.4 trillion by 2030. SHLD is the only ETF listed in Canada that focuses on a global portfolio of defense technology companies. It tracks the Global X Defense Tech CAD Index, and the index measures performance of companies involved in the defense technology space. More specifically, it tracks companies positioned to benefit from increased investment in technology services, systems, and hardware for the national security, defense, and military sectors. SHLD isn't just limited to European names. It includes major US defense firms such as General Dynamics, Lockheed Martin, and Palantir Technologies. From Asia, it holds South Korea's Hanwha Aerospace and Japan's Nippon Avionics. This is how the index allocates its investments by sector and country. For investors, an ETF such as SHLD offers diversified exposure to a sector poised for growth, driven by AI, cybersecurity, and robotics, access to an industry that is undergoing a structural increase in spending, and a differentiated exposure within the defense tech theme across geographies, names, and niches. Got a view on the defense sector? Let us know in the comments, and thanks for watching.